Housing market demand continues to falter at the end of 2024, with mortgage applications to buy a house tanking over the last week due to surging mortgage rates. This declining demand for mortgages is coming at a time after the Federal Reserve cut interest rates about a month ago, which is now leaving many people confused and concerned about the future of the housing market for the rest of 2024 and going into 2025. As you can see, folks, that the mortgage application index to buy a house has fallen all the way down to an index level of 138 in mid-October. This is close to the lowest level of home buyer demand for mortgages on record. Additionally, you can see that it's about 45% below 2019 levels of demand, indicating that there's been no recovery in housing demand due to Fed rate cuts, something which is now causing home prices to really falter and fall in quite a few markets around America. On Reventure app, we just updated the application with September 2024 home value data from Zillow, and we're now seeing official month-over-month price declines in about 10 to 12 states. And you can see those states in blue here. They're primarily concentrated in the South. Texas, Louisiana, Mississippi, Florida, Tennessee, and Arizona are the states where this seasonally adjusted home value data from Zillow is trending negative. And in particular, the metros where prices are dropping the most include Lafayette, Louisiana, Beaumont, Texas, Cape Coral, Florida, Northport, Florida, Corpus Christi, Texas, Lubbock, Texas, Naples, Florida, Brownsville, Texas, New Orleans, Pittsburgh, Shreveport, Louisiana, Memphis, Killeen, Texas, Tampa, Crestview, Florida, Davenport, Iowa, Flint, Michigan, Lakeland, Florida, Pensacola, Florida, Palm Bay, Florida, San Antonio, Texas, Phoenix, Arizona, Austin, Texas, Deltona, Florida, Jacksonville, Florida. And of course, there's other cities and neighborhoods where prices are dropping, but those are the main ones. And we're seeing, I think, sellers start to get with reality. I think we're seeing a lot of sellers in the housing market realize that the demand isn't coming back anytime soon, and that prices are really what needs to go down. Declining prices is what's actually going to bring these buyers back into the market and increase that mortgage application index. If the price gets cut from 500 grand to 400 grand, there's a lot more people that can afford that house. There's a lot more people that feel good about buying that house, which is why we're starting to see price reductions like this. This is a listing in Atlanta, Georgia, everyone. It's a 5-bed, 3-bath, 2,600 square foot home that's on the market for $299,000. That's $116 a square foot. This is below replacement cost, this house. You can see here it's built in 2005. Might need an update here and there, but it's certainly livable. And it's in a zip code here in Atlanta, 30331, where the Reventure app home price forecast score is a 34 out of 100, which indicates declining prices. Well, on this listing, you can see the owner originally had it priced at 380 grand. Then they took it off the market and tried to rent it at 2,700 a month. They couldn't rent it, so they had to cut the rent to 2,400 a month, and they've since put it back on the market at 300 grand. So the value on this house has gone down quite a bit from peak, going from 397 all the way down to 290, a 20% reduction. And we're just seeing more and more listings like that, folks. I've reported a lot of them here in Florida to you over the last 3 or 4 months. Well, we're starting to see them in other cities, in other states. The contagion is spreading. We're seeing it in Atlanta. We're also seeing it in a market like Phoenix, where we have a 4-bed, 3-bath here in Levine, which is to the southwest of downtown Phoenix. It's 1,900 square feet on the market for $345,000, $173 a foot. If you take a look at this house, everyone, the current owner purchased it in September 2022 for $431,000 and is now selling it for $345,000. So they're taking an $85,000 loss, or a 20% reduction from what they bought it for 2 years ago. And I see a lot of people out there, they try to say, no, Nick, there's no housing downturn. I don't believe it. Prices are still going up. Inventory shortage. They repeat all these narratives, right? I see them in the comments section. I see them on Instagram. They're housing market downturn deniers. And, I think a lot of these people, they're not looking at the listings. They're not looking at the data. There's more and more, there's a pile up of evidence that we are in a downturn in the South and the Sun Belt, unquestionably. The percentages reported by Zillow, they might only be down a couple percent, but individual listings keep piling up at 15, 20, 25% reductions from what houses sold for 2 years ago. I mean, Look at this one in Florida. It's here in St. Petersburg. It's a 3-bed, 2-bath on the market for $422,000. You can tell this house is actually pretty nice on the inside. I think it was a recent flip, a recent renovation. Once again, the current owner bought it April 2022 for $550,000 at the peak of the bubble. Now they're selling it for $422,000, a $130,000 loss, where you can see the value estimate is plummeting. And so I think a big question for you out there as a buyer, investor, or a realtor who's trying to understand the market is, what do you do with this information and where does the market go from here? How much more are home prices going to go down in the South? And what's the threshold for where all of a sudden it makes sense to buy? That's the mindset that you guys need to start kind of getting your headspace into. Is not, oh, is the market going to decline? No, the market is declining in about half of America right now. And how far down is it going to go? And to answer that question, you really need two principal data points. Number one is inventory. What's the inventory situation in your city, in your zip code? So if I go to a market like Nashville, everyone, I want to show you what's going on in Nashville, because I think a lot of you guys out there think of Nashville still as a boom town that a lot of people are moving to, but look at the inventory now in Nashville. We're up to 9,000 homes on the market in the Nashville metro. This is the highest level of active listings in at least 7 years in a city, in a town where, the conventional wisdom, so many people are moving here. But we now have the highest level of supply in almost a decade in Nashville. If we move on over to a market like Dallas, it's the same story. In Dallas, supply almost looks like the same graph as Nashville, up to the highest level in a decade. What if we keep heading further west to Denver? In Denver, look at this. Supply went from 6,300 homes up to over 10,000 homes, by far the highest level in 7 years. What about if we keep going west to Salt Lake City? In Salt Lake City, supply is now at the highest level since at least 2018. So in these markets where supply is growing and growing fast, that's a dead giveaway that the market's softening, that you can expect a higher likelihood of declining prices into the future. Now, conversely, if you live in a city in blue on this map, you're less likely to see declining prices. And the reason that is because the cities in blue on this map have an inventory deficit. This is a data point called inventory surplus or deficit on Reventure app. And if your area's in blue, which you can see is almost entirely the Northeast and Midwest, it means there's a shortage of listings. For instance, in Chicago, listings are down 35% from long-term norms. Meanwhile, in New York, the New York metro, listings are down 28%. In Boston, listings are down 16%. In Albany, they're down 40%. So we still have a big shortage in the Northeast and Midwest, which has continued on a month-over-month basis to push prices up, which is now when we switch to home value growth month-over-month, we see them in red because prices are increasing on a monthly basis. So the month-over-month growth in home values is inversely related to the inventory surplus and deficit. But at this point, folks, I want to talk about the Federal Reserve because it's really starting to look like this Fed rate cut that occurred in mid-September is a dud. The Fed cut rates by 50 basis points, and what happened after that? Well, mortgage rates actually went up after the Fed rate cut. They went from 6.1% to 6.6% today. So mortgage rates went up after the Fed rate cut. In addition, there's been no discernible bounce back in buyer demand. Mortgage applications to buy a house are still scraping at the lowest level in 30 years. And while they're up 6% from their levels a year ago, they're down 14% from their levels in 2022, 50% from their levels in 2021, 56% from their levels in 2020, and 45% from their levels in 2019. So there's been no discernible bounce back in real-time buyer demand, proxied by mortgage applications to buy a house. So you say to yourself, what's going on, right? Why all of a sudden is everyone blindsided here? Everyone was saying that the Fed rate cuts were going to save the housing market. Telling you, so many realtors, mortgage brokers, prognosticators, news reporters were all saying Fed rate cuts going to save the housing market. That hasn't happened. And of course, if you've watched this channel over the last 3 to 6 months, you'd have known that it wouldn't have. I was warning you guys that a Fed rate cut isn't going to do much, and it hasn't over the last month. So really, what has to happen? Well, folks, again, it's declining prices. As you can see on this graph, everyone, it's a 130-year graph of home prices in America going back to 1890. So we have 130 years of data on inflation-adjusted home prices. What do you see? Inflation-adjusted home prices are at a record level today. in late 2024. So we're taking the home prices here as historically, and we're comparing it to the cost of other goods and services. And what do you notice? For 100+ years, home prices adjusted for inflation stayed stable, but then they went into a bubble in '06. They crashed. Now they're in another bubble in 2024. So this is just not a sustainable situation, folks. These prices are too high. And this is why buyers are not coming back to the market after Fed rate cuts. And so I would encourage you guys out there, in case you aren't already thinking this way, I would encourage you to welcome the prospect of declining prices, especially if you're a realtor or a mortgage broker or an investor. Declining prices is actually going to be good for the housing market. It's the only thing that can save the housing market in the short term. Declining prices. That's what's needed to bring the buyers back in. And in terms of where prices are going to drop the most in the short term, it's these areas in blue. So we're looking at the Reventure app home price forecast score. So I'm showing you guys here actually a premium data point on Reventure app. This is the price forecast score I came up with that looks at fundamental data points like appreciation, inventory price cuts, and DOM. And this can be used to project the directional growth of home values over the next 12 months. A score below 50 indicates that future home values are more likely to decline, while a score above 50 indicates that prices are more likely to increase. And you could use this score to understand the direction of your market. And of course, Florida right now has the lowest score, 41. Florida is getting hit very hard right now, but Texas is also getting hit hard. Colorado is starting to get hit hard. Even Tennessee is starting to get hit hard. And we have a lot of pockets here in the Southeast where we're saying the score is stable, but it's starting to tilt down. And this is especially true if we look at certain zip codes, everyone. I want you folks to understand that there's huge differences by neighborhood in your local housing market. And if you're a home buyer and investor, you got to understand these neighborhood driven differences. For instance, if we're in Atlanta, the north side of Atlanta, these suburbs to the north actually have positive home price scores due to lower inventory, due to lower price cuts, due to lower DOM. So Reventure app, we're actually projecting that prices are going to be stable or go up in these zip codes to the north and east of Atlanta. However, if you're in the center of Atlanta, if you're on the west side of Atlanta, if you're in the south, if you're in the far southeast, the scores are down below 50, indicating a heavy buyer's market where prices are more likely to drop in the future. Now, what do you do with that information as a buyer investor? Well, if you're looking in your city and you find that the score is really low, the Reventure app price forecast score is well below 50, maybe it's in the 20s or 30s. That's a signal to you that it's a declining market and will likely continue to be a declining market in the future. So adjust your offers, adjust your expectations based off that. Maybe if you're in an area with really low scores, you make lowball offers because you know that it's a declining market. You know you're going to have to make a lowball offer so you don't lose money after you buy. And you know that the sellers will be more likely to accept lowball offers given the trajectory of the market. Conversely, if you're in these zip codes where the price forecast score is high, like a 61 out of 100 in 30068, we are still in a seller's market in this neighborhood in Cobb County, Georgia. Well, you got to be more realistic making your offers. Don't expect huge declines in prices. Don't make huge lowball offers. They're probably going to get rejected. And when you do buy, expect that prices are going to continue to appreciate after you buy. Having this knowledge and data is invaluable for you as a buyer or investor or even a realtor who's trying to help your clients understand the market. So to access that data right now, head to www.reventure.app and sign up for a premium plan. The cost is $39 a month to get access to all of that data. In addition, I would recommend that some of you sign up for the annual pass so you can get a 15% discount on the monthly rate, knocking it down from 39 to 33. The annual pass is great for people who know, you're going to be researching the market for probably at least 3 or 4 months, maybe longer, and you're going to want to be tracking this data month by month. Because I firmly believe, everyone, if these mortgage applications still stay very, very low and inventory keeps rising, the winter housing market, it's going to be a tough time for sellers. We're going to see prices drop by more in the south and southeast. So head to Reventure app right now and sign up for a premium plan so you don't miss out on this data.